Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at a tech stock, Tesla. Tesla is very popular among investors and traders also due to its volatility. And let's take a look at the chart. Let's go. So we are on the Market Intel website, dailymarketupdate.com. We haven't covered Tesla for a while, so let's take a look here at our tech stocks section. And you can see that we updated Tesla together with Shopify and Snowflake. You can also take a look at all these previous updates for other stocks. We also cover PayPal, Nvidia, eBay, and so on. So let's click on the daily chart here. Daily time frame gives us a good idea of where Tesla is currently, overall, to get a good idea of the overall context, right? And the Tesla chart is positioned in an overall bullish scenario. Within a bullish scenario, the idea is that a wave one topped in, end of 2021 on a larger time frame. Okay, always good to get an idea of the overall bigger picture, larger time frame. The idea is that we completed a wave two earlier this year, and we've since then started a third wave to the upside, which is, however, not clearly impulsive yet. So we might be dealing with some kind of a diagonal pattern on the smaller time frame. But the idea is that as long as we're holding $167.41, which is the next key level, the focus can be on higher. Below that level, we would have to assume that the wave two is still unfolding. Okay, the wave two that bottomed earlier this year is still unfolding. We would simply call that the alternative wave 2. It is somewhat likely, not preferred, however. But why is it somewhat likely? Because the rally from the recent swing low on the larger time frame, from that April low, it is not clearly impulsive. So it takes a little bit of time to really be able to confirm this. Critical level that needs to be broken to the upside here on the daily time frame is the $414.50 level, the top of wave 1. So from an Elliott wave point of view, a third wave rally is typically confirmed once we get a break above these key levels, like the top of a wave 1. Then we can watch for a third wave and watch for the targets to be reached, which are located for Tesla in the region of $967 plus, which is the 200% extension. These might change a little bit depending on whether, for example, if Tesla forms another low, then this upside target might change. It has to shift because it's all based on Fibonacci mathematics, and the targets for the next waves and next structures are calculated based on the previous swing low. But with a probability of 65%, our idea or our view is that the low is in and we are moving in a third wave to the upside. Now let's take a look at the 4-hour chart for a more detailed perspective. And here you can see that we're tracking at the moment a series of 1-2 setups, a so-called nested 1-2 structure. The April low at $139 or $138.80 is what we assume is not confirmed yet fully, but it's our preferred scenario with a probability of 65%. So then we have this quite bullish 1-2 structure where we're now watching if the market can actually hold this already mentioned $167.41 level. Now, however, below that, it becomes more probable that a much larger wave 2 correction is actually unfolding. Not preferred at this stage because then this would be a 3-wave move up, but possible and a reasonable alternative. We always need a reasonable bearish alternative. In this case, what we'd like to see is further confirmation for the bullish scenario to, let's say, to be playing out. We want to see a break above $271 next, which is obviously a little bit closer than this $414 level on the daily chart. So this is a critical level that needs to be broken, 271, to confirm that the smaller degree third wave rally to the upside is actually unfolding while holding above $167.41. I mean, that is the condition. Because only then this 1-2 setup is really valid. Okay. It's just that, I mean, could this all be a wave 1? Maybe, but it just looks too much like a 3-wave move, right? Therefore, if we assume a third wave rally is unfolding to the upside, we should really hold that $167.41 level. But overall, as you can see, we're quite positive about Tesla. So that means even if the market breaks below that $138.80 level, or first 167, then 138, we would still see the correction as a wave 2, and it would rather, for long-term investors, rather be an opportunity to get positioned for a slightly better price for then a long-term rally towards $900 plus. So that's the update about Tesla. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And also register on our website. You can do that completely for free. You could get additional updates, regular updates about Tesla and other tech stocks and cryptocurrencies. And also let me know in the comments which other tech stock you want me to cover going forward. Thank you very much. Bye-bye.